You know how to properly read a candlestick chart? Because if you don't, this could be drastically affecting your trading and your trading results. In this video, I want to go over the basics for beginners of how to properly read a candlestick chart, what do candles mean, and how we can use them to profit in our trades. And then later on, I'm going to go through some very specific examples of how we can use the price action on a candlestick chart to profit in both up and down markets. If that sounds like something you're interested in, then stick around for more. First things first, we're going to go over a up candlestick, then we'll go over a down candlestick, then we will go over the time frames of candlesticks, and then lastly we will go over putting it all together and reviewing a candlestick chart to learn how to trade candlestick charts, Japanese candles. Alright, so in front of you we have a green candlestick. This is what is known as an up candlestick. Every candlestick essentially has four main components. You have the high, the close, the open, and the low. And these vary in position depending on whether or not you are looking at a green up candlestick or a red down candlestick. So for the up candlestick, what is known as the body of the candle is shown here in green. So everything that you see that is green is known as the body of the candle, and it is the difference between the open and the close. Okay, so the open of the candle is represented by the bottom of the green body, and the close of the candle is represented by the top of the green body. So essentially what is happening here is there is an open for the time frame of the candle, and we can have candles on different time frames, but for any time frame there's an open. The price went up and the close was higher than the open. Anytime the close of the candle is higher than the open, we're left with a green candle body. The gray area on the screen is what we call the wick of the candle. The wick of the candle is essentially showing you where the price has moved to but is no longer at. So essentially, how does a wick form? On this candle, for example, this green candle body, at some point in time, the price would have been as high as the top of that wick. The minute that the price retraces and comes back, that wick starts painting on the chart. So by looking at the top of the wick, we can see the high move of the price, and we can see that the price has retraced down to the close in this particular case. Also, just like we saw the high up here, the wick at the bottom shows us the low price of the day. So at some point in time, the body of this candle had fallen all the way down past the open, turned red for a brief period of time as it passed the open. We'll talk about that more in a second. And it went all the way down to the low, retraced back past the open, and went all the way to the close. Right now you see that the candle body has actually changed in color. This is actually a down candlestick. Alright, so that would have changed very quickly on your screen. And the other thing that you should notice is now the open is at the top of this candle body and the close is at the bottom of the candle body. So this is how we read down candles. So the wick still represents the high and the wicks at the bottom still represent the low. However, when the price action opens and the close goes lower than the open, it paints a red candle body. So at some point in time, the price moved from the open, went all the way down here to the low, and as it retraced, it pulled back like this, okay? So this is how you read a red candlestick. This is a little bit different than the previous candle because the previous candle had an open here, so anything lower than that would have been red and higher would have been green. This is an entirely different candle, okay, for a different period of time. It had a different open. So for this case, the open was up here. The price would have gone down to the base here, retraced, and drawn the wick as you see there. Alright, so now let's briefly talk about what a candlestick represents. A candlestick represents a period of time. So when you look at charting time frames, there are many time frames that are available. And so one candlestick represents one period of time as delineated by the time frame of the actual chart. So what does that mean? So there are chart time frames. Okay, and so if I can type properly, you may have a monthly chart. In that case, with a monthly chart, this candle would represent about 30 days of time, about 20 trading days since the markets are open from Monday to Friday. So a monthly chart would paint one candle per month. So this one candle would represent January or February or March or any month, you name it. All right, and what you would be looking at on a monthly time frame would be the open of the month, the close of the month, the high price of the month, and the low of the month. Just like we can have monthly, we can also have weekly time frames. There can be daily time frames. So if we were looking at a candle on a daily time frame, and it happened to be a red candle, as in this example, this would show the open of the day, the close of the day, the low price of the day, and the high price of the day. If we were looking at a 60-minute chart, then every 60 minutes a new candle would pop up. It would be painting and moving as the price action moved throughout the day in the market. And what we would be looking at would be the open for the 60-minute period of time, the close of the 60-minute period of time, and the high and low of that 60-minute period of time. And this can go all the way down, depending on the charting platform that you're using, to a 1-second chart. Some platforms limit you at 1 minute, but it doesn't matter. Whatever time frame you select, a candle represents one period of that time. Now we've jumped over to an actual chart, and you can see how these candles combine to create a story. All right, so each individual candle in this time frame, you can see that this is the $INDU, which is the Dow Jones. This is a daily chart, So each one of these candles represents a single day of action. So for this candle, let's just pick one. We'll pick this one right here. The open of the day would be the bottom of the green candle. The high of the day would be the top of the green candle, and the low would be the wick, just as we explained previously. Let's zoom in here to these candles just so we can look a little closer. So again, for example purposes, on this green candle, the open would be the bottom of the candle. The high of the day would be the top of this wick. The price would have retraced to the close back here, leaving that wick. At some point in time, it would have placed the low of the day. For this red candle, we would have opened at the top of this candle, maybe painted a green candle going to the top of that wick, retracing, creating the wick, passing the open, going past the open. So when we went lower than the open, we started painting a red candle all the way down to the low of the day, then retracing back to the close, which was lower than the open, leaving a red candle for the day. And if we were to go to a different time frame, let's just say a 60-minute time frame, it's the same exact thing. So in the 60-minute time frame, if we were looking at these candles, every 60 minutes a new candle would start to form. All right, so this was a red candle that opened here, painted down, and closed lower. You can see this candle is actually painting in real time. So if we were to zoom in, if we were to zoom in to this single candle right here, let's see if we can do that. What we'll see is that it's actually moving. There we go. Did you see it move? So it went up. So the price went up, and now you can see it painted the candle body a little bit higher, and then it's going to retrace. So we can see the high of this 60-minute period, and then we can see the low of this 60-minute period. And at the top of the hour, a new candle will form over here, and then we will be able to see the price action on that as well. Let's talk about what we can actually do with these candles. So what the candles allow us to see is a picture of how the price has moved over a certain period of time. Here, looking at daily candles, I can go back to November. I can see that the price hit these highs at the top of this wick of about 26,277 on the Dow. I can see that there were red candles and green candles, but overall, the red candles overpowered the green candles to bring us down to a low, draw us back up to a high of 25,980, which was a lower high than this previous high, and then the red candles were overpowering again, and they took us down all the way to the lows of Christmas Eve, the lows of about 21,792.20. All right, so because of the pattern of candlesticks, not only can I see what happened as far as the high and lows each day, because this is a daily chart, but I can also see the ebb and flow of the price to see who was in control, the bulls going up or the bears going down. Here I can see the bulls taking back control over the bears with these candle patterns at the very bottom, and then all of a sudden we have a rising move up. And so once we have the candlesticks in place, we can do a lot of things that I will cover in future videos, such as determining trends, drawing trend lines. Most recently, we can see a retracement. That means that the price was going up, and then all of a sudden we had a series of red candles that brought us down to a retracement of the previous move, and now we're moving up bullishly again. And so there's a number of things that we can do. So we can look at the daily time frame, and that will give us the picture back all the way to November, but if I wanted to look at the weekly time frame, I can see, how the Dow has moved literally over the past year and a half or 2 years or so. So I can look at the entire 2018 year in weekly intervals represented by these candles to see when we put highs in the market, when we put lows, and where we currently are relative to the past price move on any type of security. If I wanted to look at Apple, I could, I need to type right, APL. If I wanted to pull up Apple stock, I could do that. I can pull up any ticker in this way, and then I would really be able to see the story of how the price has been moving. And I can do that all the way down here to a 1-minute chart, so I can see what's happening each minute. So as we watch this in real time, you'll see this candle painting. In real time, you see it just moved a second ago. And so we can see how things have been going on since the last couple of hours. We can also go all the way down to a 1-second time frame, or in this case a 15-second time frame. So we'll see this red candle painting. So it all depends on the time frame you want to trade and what you actually want to see, but candlesticks have the ability to give us at a glance a lot of information based on the time frames that we're looking at. We can see the overall trends in price movement for a period of time, but we can also see the most recent trends, larger trends within trends, and a number of other things that can really help contribute to our profitability as traders. I'm going to follow this video up with a number of follow-up videos talking more about how we add indicators to these candles to give us a clearer picture of what's going on in the market, to help us with our trading ideas, our trading strategies, as well as how to leverage multiple time frames, how to integrate and merge over into those multiple time frames, how to use those to enter a trade, how to use those to scale in and out of trades, and much, much more. So if you're interested in that, go ahead and subscribe to the channel and stay tuned because there's more content to come.